Hi guys. So in this video we're going to be going through the topic of the year 11 topic of earning and managing money, but more specifically talking about tax because that's like the most important thing in this. You could still be ask questions about like time and a half and commission and all that kind of stuff, which also falls in this topic, but I'm more focusing on tax here. So things you need to know is how to calculate income tax. First of all, talking about like all the tax deductions. So you got your gross pay, you take away all the tax deductions like your union fees, the donations, work-related expenses, all that kind of stuff. Calculating the taxable income by taking away all that stuff, like I just said. Calculate the Medicare levy. So Medicare levy is 2% of taxable income. It'll tell you that in the question, so you don't need to remember it. And it says basic levy only because there are other parts of the Medicare levy and Medicare surcharges, but we don't really look into that in HSC. And calculate PAYG, pay as you go, per fortnight or per week using the tax tables. So it says per fortnight or per week, but you calculate it from the tax table, and then you will need to divide by 26 or 52. And then from that, also calculating net pay, and then using technology to perform financial computations, like working with percentage change, which I got a question on this as well. So there's no reference formulas or anything for that in this. The only things you really need to know are the rates of Medicare levy, which is 2%, and again, it's given to you in the question, and also details of the tax table, and of course the tax table, if there is a question in the HSC, that you'll be given the tax table for sure. And then, so you're talking about the frequency and the difficulty. So I noticed, like looking back, they used to never really ask about tax, and then over the past 4 years or so, they just keep asking questions about it, and it's generally the same kind of question. You got your gross income, finding taxable income, calculating income tax, Medicare levy as well, whether you got like a tax deduction, tax return or tax liability, all that stuff. Anyway, so let's go into the first question, and this is from the 2008 paper, question 26B. Actually, I think it's supposed to say 2001, but whatever. So Miles is in his third year as an apprentice film editor. He purchased some equipment for $5,000. After 3 years, it has depreciated using the straight line method. Calculate the rate of depreciation as a percentage. So what we need to do, first of all, it's we see that after 3 years, it is depreciated to that much. So that means we need to find how much is actually depreciated by first. So we have 5,000 minus 3,635, and that equals $1,365. So what we're seeing here is over those 3 years, it's depreciated by that much, and it's by the straight line method. So we're not going to use the declining balance method. Straight line method basically means simple interest. So from this, we're just going to put this into our simple interest formula, 1,365. So you're kind of thinking of this, the amount has go down as the interest, even though it's gone down. And that equals 5,000 being the principal, times the rate, which is what we're trying to find, and then times it by 3 because it's for 3 years. So of course, you're just going to divide by 5,000, divide by 3, and you get R equals 0.091. So therefore, the rate is 9.1% per annum. Okay, the way that we can check that, of course, is just do 9.1% of 5,000 and then times it by 3, and you should get 1,365 again. So that's the first question. Second question, he earns $800 per week. Calculate the taxable income if his only allowable deduction is the amount of depreciation in the third year. So what we're doing is we're focusing on just 1 year rather than just the whole years. So the first thing we need to do is see how much it's depreciated by in that third year. So we're going to get, we found in the previous question that it's depreciated by that much in 3 years. So we're just going to 1,365 divided by 3 equals $455. So that means it's depreciating by $455 each year. So also we get that $800, and we're going to times it by 52 because he's getting that much per week. which is 41,600, and therefore this is his gross income and these are his taxable deductions. So therefore his taxable income, that equals this minus this, so there will be $41,145. And then lastly, use this table to calculate the tax payable. So tax payable, it's just your simple tax table question. So we're looking at this bracket, and then these numbers might not be familiar to the ones that you've done in the past. And I think that's just because it's such an old question. Obviously, the tax rates change over the years. So going from this, just following the normal process, we're going to get our taxable income and find how much over $28,000 it is. So you get 41145 minus 28,000, and that equals 13,145. And now that we have that, the rule is saying it's 30 cents for every dollar, so 30% of that. So we got $4,500 because $4,500 plus this, so plus 0.30 times 13145, which equals $8,443.50. All right. So that's that question, and it's just this last one was just a basic tax table question. All right, going into my next one. So this doesn't really have anything to do with tax tables, but I figured it was a good question because it talks about net pay, gross pay, annual leave, and some percentage questions as well. So starting off with this first question, this person's earning $1,500 per fortnight. With fortnightly deductions of all these, we need to find the fortnightly net pay. Of course, it's just going to be this minus all these. So you got 1,500 minus 269.17 minus $7.88 minus $16.25, and that equals $1,206.70. Part two is, he's paid annual leave loading of 17.5% for 4 weeks gross pay. Calculate his annual leave loading. So note that this question isn't asking for his total leave, his total pay when he's getting annual leave. It's just asking for the leave loading. So we're going to get this $1,500 per fortnight. And what we should really do is divide it by 2 to get $750 per week. Now that we've got $750 per week, in this particular question, you didn't need to do this because, of course, you could have just done, well, I'll show in a sec. So after this, we're going to get $750. We're going to times it by 17.5%, so 17.5 over 100. And we're going to times it by 4, and that's going to give me, sorry, just give me a sec, 750 times 0.175 times 4. And it's going to give me $525. And that's the answer. Now, of course, if this is per fortnight, I could have just done this and then times it by 2 because there's 2 fortnights in 4 weeks. Doesn't matter, you'll get the same answer. But note that this is just the annual leave loading. It's not the total pay. If the question was asking for the total pay, then of course I will need to add 4 lots of 750 on top of that as well. Because the way that annual leave works is you get your normal pay plus the loading. And then lastly, part 3. Back in 2002, there would be like smaller questions inside of it. So there's part 3, question 1. So Jordan visits Italy on his holidays and he pays 180 euros for a pair of boots. This price includes a value added tax of 20%. So what was the price before the tax was added? So this is like finding the pre-tax question, the pre-tax price or the pre-GST price. So remember, the way that we do that is we're saying there's some number, some original price that when I multiplied it by 120% or 1.20, okay, so it equals $180. Okay, we're trying to find the price afterwards. What you can't do is find 20% of $180 and then take that away. it doesn't work that way. What we need to do is kind of think of there's some number that we're trying to find, we increase it by 120%, and then we got that. So what we need to do, of course, is to solve this equation is we're going to divide by 1.20. So 180 divided by 1.20, and that gives me $150. What that means is this, before the tax was added, it was priced at $150. And of course, the way you can check that is find 20% of this, add it on, it should equal 180. For question 2, it's similar kind of question. So how much is 180 euros in Australian dollars if 1 Australian dollar is 0.58? So I'm going to let A be the amount of Australian dollars. And what we're saying is the amount of Australian dollars times 0.58 equals 180 euro. So we're trying to find what amount of Australian dollars times it by 0.58, because that's that conversion rate, equals 180. And again, I'm just going to divide by 0.58. So A equals $310.34. Remember, rounding to 2 decimal places when we're talking about money. So $180 in euro, 180 euros is equal to $310.34 Australian. So yeah, I want to do this question. Like I said, it's got nothing to do with tax tables, but it has quite a few things to do with percentages. So that's why I choose this one. And the last one, and this is a requested question, so I'm not exactly sure what past paper it comes from, but it's a pretty good one. So we see that this table, we've got this table below, and the Medicare levy to be paid is 2% of the taxable income. Jenny calculates a tax payable as this. How much we have she have to pay the Medicare levy? So this is actually quite a tricky question, because we're trying to find how much we need to pay in the Medicare levy, and all we know is how much tax she needs to pay. So based on this tax table. So we're going to have to do the tax table in reverse, basically. So what we're going to do first of all is, because the amount of tax we need to pay is $21,833, we know it can't be in this because, it's too small, because if it was in this tax bracket, it has to be greater than $54,000. But it can definitely be in this tax bracket because it's greater than $20,797. So we're looking at this tax bracket. So now that we've got this, we need to kind of do the process in reverse, the tax table process in reverse. So what we've essentially been told, right, is $20,797 plus some number, and that some number is going to be our taxable income, minus $90,000 times 0.37 equals $21,833. Okay. What I'm saying here is, like, if we knew what the taxable income was, I would then subtract it by 90,000 to see for everything over, times it by 37%, and then add that amount. So it's just doing that process in reverse. So yeah, going from here, what I will do is I'll subtract this over first of all. So I have X minus 90,000 times 0.37 equals 1036. So I've just subtracted that over. Now I'm going to divide by 0.37. So I'm going to get X minus 90,000 equals $2,800. And now I'm just going to add that $90,000 over. So X equals $92,800. So therefore the taxable income equals $92,800. Using that taxable income, what we're trying to do here is we're trying to find the Medicare levy. And as we know, the Medicare levy is 2% of the taxable income. That's why I needed to find the taxable income first. So using this information, use a tax table in reverse to make our way back to this. And now I just need to find 2% of that. So therefore, Medicare levy equals 2% of $92,800, which equals $1,856. And that's how much needs to be paid in Medicare levy. So a bit of a harder question. I would say if this was in your HSC, it would be maybe like a band 5, potentially even a band 6 question, just because it's just having to do the whole tax table process in reverse, which hopefully you are, fairly comfortable with. And yeah, it's just a bit of algebra and working your way backwards. Anyway, hopefully this video has been helpful. If you have any more video requests, be sure to ask. Thank you.